All right. Well, we can move on to our star of the week. Our star of the week is Hammond Manufacturing, symbol HMM.A. On the TSX. Hammond Manufacturing Company manufactures a broad range of products for electronic and electrical products industry, including metallic and non-metallic enclosures, racks, small cases, outlet strips, surge suppressors, and electronic transformers. The stock has jumped by about 26% to 765 over the past week after it reported its Q2 earnings on August 1st. Additionally, the stock is trading up about 81% year to date. Hammond's net sales increased year over year by about 7.3% to 61.4 million, while being slightly down quarter over quarter by 1.7%. However, gross margins have significantly improved to 36.7%, up from 33.1% last quarter and 30.6% last year, attributable to cost controls as well as increasing pricing power of its products. Net income increased to 5.5 million from 2.3 million, or 49% cents per share and 21 cents per share. A massive increase to say the least. In addition, operating cash flow before working capital changes increased to 9.6 million from 5.4 million, another big uptick for the company. In addition, going forward, the company has announced that its new production facility in Palmerston, Ontario came online in June and is expected to be fully operational by the end of the third quarter. After the jump in price, the company is now trading at about a 5 times PE, still quite cheap on a trailing basis. If the price hadn't changed, it'd be about a 4 times PE, just to give you an idea about how the valuation metric will change with the price. The company is anticipating an appreciation of the Canadian dollar against the American dollar, which would put downward pressure on the margin. So there is FX risk in the company as well. The company is quite cyclical, so it could take on negative headwinds there. And it has recently taken on debt to fund that facility, increasing that exposure to cyclicality as it still will need to meet its interest payments. So it's not a risk-free company by any means. I'm not saying it is, but it is cheap. So the company really has seen a consistently low valuation, but it is now seeing growth as well. So share appreciation should follow when you're seeing the fundamentals start to tick up over time, and that's what we've seen. Overall, the company just really has had a very strong quarter, likely causing some market participants who are just overlooking the company to start paying attention a bit more, because it is only about an 80 million market cap at this time. So when you're that small, good numbers can really just boost the awareness of the company, and people will start to come in, and that can ultimately, I'm not saying it will happen, lead to ratio expansion, multiple expansion, which could happen down the line. But for now, I can say with certainty it is our star of the week.
Yeah. And then a bit of a spoiler here. We talked about the electrification report last week, which we just released. So these are companies that are related to the trend of renewable power and electrification in EVs. And Hammond Manufacturing was part of our top tier monitor list in that report as well, given that the components that it manufactures are also used in electrical transmission as well. So it's very interesting company. I mean, we've been following it for many years. We actually have a standing recommendation, or I think we moved it to hold recently, but it was a standing recommendation earlier this year and last year on Hammond Power, which is a related company. I believe each one is run by a Hammond brother. But the company split, over 10, maybe 20 years ago. And Hammond Power has been one of the top performers in the Canadian stock market. So I don't know if you have the figures on that, Brendan, but same idea, really solid company, good growth, company that really was being overlooked and traded at a low valuation. I think it's what, up 600% or something like that.
45% over the last year, and it's 700% over the past 5 years. And when I ran the
numbers
a few months ago, it was the top.
A phenomenal performer, and that's what we want to see. But then again, it is a cyclical business. One of the differences between Hammond Power and Hammond Manufacturing, Hammond Manufacturing does really do the minimum when it comes to investor communication. That is also something that has held it back a little bit. But both companies, certainly strong fundamentally, and we'll probably be talking to Hammond Manufacturing again soon.